So, like I said, today we are going to be dissecting short-term decision making. All right. Uh, what do you understand by short-term decision? What is marginal? What are the techniques that can be used? What are the principles that you can apply in short-term decisions? What are the areas of the application of marginal costing technique in relating to short-term decisions? All right. Then, of course, thereafter we are going to have different illustrations depending on the scope of the short-term decisions. All right. So now, what do you understand? What is short-term decision? Short-term decision simply means the application of marginal costing technique and the principle of relevant costing to analyze a particular course of action in making managerial decision. I repeat, short-term decisions represent the application of marginal costing technique and the principle of relevant costing to analyze a particular course of action in making managerial decision. For this purpose, we can say that marginal costing concepts involved the process of comparing the benefits arising from a particular course of action with its associated relevant cost. Again, marginal costing technique involves the process of comparing the benefit arising from a course of action with its associated relevant cost. It is also known as cost-benefit analysis. Marginal costing technique is also known as cost-benefit analysis, in that management may want to know whether the benefits arising from a course of action will outweigh the total relevant cost. Okay, and is a kind of technique that also relies on the behavioral classification of cost, which simply means that a cost item must be capable of being classified as either a variable or fixed cost. So this is what marginal costing technique means in relation to short-term decisions. On the flip side, relevant costing principle will be applied in this situation, in this circumstance, in making managerial decision by taking into consideration all the costs that are relevant to the decision that is to be made, which means that any course of action or any cost that is not related to the course of action will not be considered when making the managerial decision. However, we can say decision making involves the process of selecting a course of action from among different alternatives. All right. So decision making involves the process of selecting a course of action from among different alternatives. When you have different options, so the process of selecting one of the several options available, that is decision making. However, in relation to short-term decisions, the course of action will be viewed in two different perspectives. When I say course of action, the course of action is the thing that you want to do. Let's say, for example, you want to produce a product. That product that you want to produce is your course of action. If you want to execute a project, that project is your course of action. I mean COURSC, that's the course of action. All right. So anything you want to do, as far as short-term decision is concerned, you are going to take it into two different angles: the economic perspective and also the qualitative perspective. Now, What do you mean by economic angle and then the qualitative angle? The economic angle, also known as qualitative, monetary, or quantifiable uh, perspective of the decision that is to be taken, involves the process of comparing the benefit arising from a course of action with the associated relevant cost, whether it will result into a contribution, profit or loss, or contribution or savings or deficits to the organization. That is the economic angle of the decision. So when you do all those calculations that we are going to do, they are the economic, they are the quantitative, they are the quantifiable or monetary aspect of the decision that is to be taken. So the process of comparing the benefit that will arise from that course of action with the associated relevant cost is what is known as the quantitative factor or perspective or angle of the decision that is to be taken. All right. Then, what do you mean by perspective? What do you mean by qualitative angle or perspectives? The qualitative perspectives, also known as non-monetary, uh, non-quantifiable, all right, aspect of the decision that is to be taken. It represents those factors that cannot be expressed in monetary terms. All right. Any action that you want to take that you cannot express quantitatively, they are the qualitative or non quantifiable factors. Okay. However, the quality of the decision that is to be made will have far-reaching effects on the on the ability of the company to take advantage of market condition. All right. I repeat, the quality of the decision that is to be taken will have far-reaching effects on the ability of the company to take advantage of market condition. This is because of the fact that bad decision can erode the reputation of an organization. It can result to financial losses, right? It can result to financial losses, and every management wants to avoid that. And that's why before the final decision is taken, you need to ensure that the responsible person within the organization is aware of the course of action or the final action that is to be taken. So it is important, you as a management accountant, you need to notify, you need to call the attention of the management to or you notify the management on the non-quantifiable factors and the decision or about the decision that is to be made. This is because any wrong decision being made can cause financial losses for the organization. And when this happens, management will be looking for who to use as a scapegoat. And that's why anything you are doing as a management accountant, you need to relate with the responsible management member within the organization to allow them to take the final decision. Even if you are one of the decision maker, allow others to make the final decision, because you can't be the one that will do the analysis and you also be the one that will be taking the final decision. Allow others to the other decision makers to conclude on the final decision. All right. So that is the introduction to short-term decisions. All right. That's the introduction to short-term decisions. Now, let's talk about areas of application of marginal costing technique. You will recall in our first class under operating statements, I mentioned to you that marginal costing technique is a technique designed principally to aid managerial decision, because marginal costing concept will allow management to focus on the areas of the business that are strategic and that will allow them that are strategic to achieving the company's objective. Okay, so now examiner can ask you, this is a very important area of marginal costing technique. Examiner can ask you, okay, what are the areas in which management can support decision making? I can't count 1, 2, 3 that's in the past that the examiner has tested this scope in different ways. You must know what you are doing, all right? And they are very straightforward. If examiner is asking you to discuss or explain the areas in which marginal costing technique can aid managerial decision. So all you need to do is to just explain about marginal costing technique, and then begin to discuss the areas of the business in which you can apply marginal costing technique for decision making. All right. In any case, so let's talk about this briefly. All right. So marginal costing technique can aid managerial decision in the following areas. Number one is deleting of a segment. Number two, make or buy decision. Number three, shutdown of capacity. Number four, adding of a new product. Number six, special order. Number five, special order. Number six, pricing decision. Okay, pricing decision. Then number seven, cost volume profit analysis. Cost volume profit analysis. Then number eight, optimal product mix. Optimal product mix. Then number nine, linear programming. Okay, linear programming. These are the areas in which you can apply the principle of marginal costing technique to aid managerial decision. All right. So now, for the purpose of this class, our focus will be on 3 line items. We are going to discuss in this class, under this topic, our focus will be on deleting of a segment, make or buy decision, and then special order. These are the 3 areas we are going to discuss. Every other ones, we are going to talk about them when we get there. Most of them are topics on their own. Like, for example, Mr. Shuaju has already taken you pricing decision. So cost volume profit analysis is a topic on its own. Optimal product mix is a topic. Linear programming is a topic. All of this, we are going to dissect it when we get there. The focus is on the 3 areas that I mentioned, which is discontinuance of a segment, make or buy decision, as well as a special order. Now, let's take it one by one. This class will last for the next 3 periods, maximum of 3, minimum of, let's say, 2.5. Today, we are going to complete, by the grace of God, my plan is to complete the deleting of a segment. I will explain what is deleting of a segment, what are the formats, what is the format that you can use to carry out your economic analysis of the decision of the segment. What are the qualitative factors? Then we'll begin to solve illustrations. Each of them, we are going to solve minimum of 2 illustrations. And today, it is my plan that we are going to complete the deleting of a segment. In our next class, it will be make or buy decision. And the third class, it will be special order. Okay? So let's take it one after the other. All right, so let's talk about deleting of a segment. What do you mean by deleting of a segment? Before we begin to talk about it, let me just give you a snapshot of what deleting of a segment is all about. You see, oftentimes a product or a segment of the organization may be operating at a loss. Let's say, for example, you have product a company produces product A, B, and then C. The profit for the year for each of the products, the performance of each product is, for example, let's say product A has a profit of 5 million naira. A profit of 5 million. Product C make a loss of 2 million. Sorry, product B make a loss of 2 million. Product C generated a profit of 7 million. Now, when you look at product B, you will notice that product B is operating at a loss. Product B is operating at a loss. So as a result, management will be contemplating on whether they should discontinue producing product B, because of that loss-making segment. So management may now be thinking of closing down product B. They don't want to be producing products that is not profitable, so that they can concentrate on product A and C. This is the basis of what we want to discuss under the deleting of a segment. Now, when you talk about discontinuance of a segment, often in a manufacturing outfit, management may be contemplating on whether or not a particular segment, including types of customer, geographical location, channel of distribution, okay, or products should be discontinued or not. This usually arises when the segment is operating at a loss. The only reason that we make management to be contemplating on discontinue of a particular segment is because the segment is operating at a loss. That is the ultimate, that is the main reason. All right. If the company is, if the product is, if the segment is operating at a profit, if the company is making profit from the product, they will not be contemplating, they will not be thinking of closing down the product or the segment. Okay. So the major reason that once you are given a question, an examiner is asking you to advise the company whether they should shut down or whether they should discontinue or whether they should delete or whether they should drop the sale of the product, then you should know that this relates to deleting of a segment. So it is only when a product is making a loss that management will be contemplating on deleting the product or the segment. I believe this is very clear. Now, anything you want to do in relation to short-term decisions must be viewed in two different perspectives. We are going to look at the economic perspective and then the qualitative factor. Michael, you are writing on my screen. Stop it. Okay. So, in relation to deleting of a segment, we are going to look at the economic angle and then the qualitative factor. So what do you mean by the economic perspective of deleting of a segment? Remember what I said the other time. This product that is operating at a loss is what we know as the segment we are referring to. That is the segment. That is the affected segment. The target is on the affected segment. Now, because this product B is operating at a loss, management is now thinking whether they should discontinue producing product B or not. And this is where you have responsibility as a management accountant to provide expertise to the management. You need to advise or you need to recommend to the management on what needs to be done. Now, What we are now saying is that before you make the final decision, before management make the final decision, before you provide your recommendation or advice to the management, you have to analyze the affected segment in two different perspectives. In this case, this product B, we want to analyze the economic angle as well as the qualitative aspect of product B. So to do the economic angle, you are supposed to compare the cash inflow arising from this product B with the associated relevant cost, whether it will result in a positive or negative contribution to the company using income statement or contribution margin approach. So when you talk about economic perspectives, it represents the process of comparing the benefits or the economic and financial viability of the affected segments to ascertain whether it will result in a positive or negative contribution to the organization. So what we are saying is that you want to compare the sales value. You want to compare the sales value, which is the cash inflow arising from that particular segment, with the associated relevant cost, whether it will produce a positive or negative contribution to the organization using income statement or contribution margin approach. Because it is believed that, of course, when you are doing this, you can use these formats. If you like, you can use this format to prepare the income statement or contribution margin approach, or to prepare the contribution margin statement. Now, from this format, the first item is the sales value. Please, whatever you are going to do in your economic evaluation, whatever you are going to do must be in relation to the affected segment. Anything that is not related to the segment should not be considered. Your focus is on the affected segment. Therefore, to do this, you are going to pick, you go to the question, you pick the sales value of the affected segment, whether it's a product, a branch of the organization, or a kind of a channel of distribution, or a type of customer that the company do serve. All right. So you are going to pick the sales value. You then compare it with the relevant cost. This sales value is the benefits that will arise from the affected segment. So you need to compare this with the relevant cost of making the segment, whether it will produce a positive or negative contribution. Now, to prepare your contribution margin statement or income statement, so you start from the sales value, you compare with the relevant cost. Under the relevant cost, you are going to have direct material, direct labor, direct expenses, variable production overhead, opportunity costs, direct, incremental, attributable, specific fixed costs. Any fixed cost that is relevant to the segment, then you need to include it. You add up all the relevant costs. You then less the relevant cost from the sales value. Whatever you have thereafter will be your either positive or negative contribution. So at this point, you need to make a decision. This is decision rule. What are you supposed to do with the final answer that you have gotten? What are you supposed to do with it? So the A part, number A, if positive contribution after you have carried out your economic analysis and you have a positive contribution, your advice should be that the segment should not be deleted. All right? The segment should not be deleted. This is because the segment is contributing positively towards the recovery of the company's general fixed overhead and net profit. You know, the general fixed overhead has already been incurred. So all products or all the segments supposed to be contributing from their contribution, they will contribute towards the recovery of the company general fixed overhead. They are the one that will bear the general fixed overhead. So if the product or the segment is contributing positively, your advice should be that the company should not delete the segment because they are contributing positively to recover the fixed overhead that have been incurred as well as the net profit. But if you have the segment is producing negative contribution, then your advice should be that the segment should be deleted. The segment should be deleted. This will then increase the overall net profits of the organization. A negative contribution will worsen the financial position of the company. All right, it will worsen the financial performance of the company. Therefore, the best thing to do for negative contribution is to delete the segment. Once you delete the segment, you see that the overall profit of the organization will go up. All right, so that's the decision. Then number C, the top point in your decision rule is zero contribution, where the zero contribution will arise where the total revenue or the total sales will equal the total relevant cost. So when this happens, the company can either delete or not delete the segment, depending on other qualitative factors, depending on other qualitative factors. So this is what you need to do as far as deleting of a segment is concerned. Once you are given a question on the day of the exam and you are asked to advise whether the product should be discontinued or whether the product should be deleted or whether the product should be closed down, whichever the way examiner has described it, you should know that this one relates to deleting of a segment. And under deleting of a segment, you are supposed to analyze the segment in two different perspectives, the economic angle. In doing the economic angle, you compare the sales value versus the relevant cost of making the segment, whether it will produce a positive or negative contribution. All right. And we said that if it is positive contribution, don't delete the segment. If negative contribution, delete the segment. Where you have zero contribution, the company can either delete or not delete the segment, depending on other qualitative factors. So let's talk about qualitative factors. Remember, earlier today, I mentioned to you that qualitative factors are those factors that cannot be expressed in monetary terms. Any factor that you cannot quantify, they are the qualitative factors. Now, in relation to deleting of a segment, what are those qualitative factors you should consider? Because on the day of your exam, your calculation is not sufficient for you to earn your full mark. You have to state all the qualitative factors. Whether examiner asks you or not, you must state your qualitative factors. And when you are stating the qualitative factors, please don't make it generic. Don't just cram. Don't just cram what you have in your text or in your textbook and then give it to your examiner. No, that is not what the examiner wants you to do. You have to personalize it. You have to link the question. You have to link the qualitative factors with the question. You link it with the question. Don't make it generic. All right. So you will see the way we are going to be when we begin solving questions. We see the way we are going to be doing it, and that's what is expected of you. Don't just cram and dump it on the day of your exam. Okay. So let's talk about the qualitative factors relating to deleting of a segment. Now, this is what will help you. Like I said the other time, you have to personalize it. And if you don't understand the basics, you won't know how to express yourself when you are stating your qualitative factors. All right? So, you want to delete a segment. Like I mentioned the other time, this product B is operating at a loss. Management is now thinking that they want to discontinue producing product B. So what are the factors you need to consider before you delete product B? What are those factors? What are the qualitative factors to take into consideration in relation to the segment that you want to delete? That is what the examiner is asking you as far as the qualitative angle of the decision is concerned. Now, the following are some of the qualitative factors to be considered in relation to deleting of a segment. Number one is the impact of the closure decision on the company's reputation. All right. So you want to delete a segment. So how will it impact the image or the goodwill or reputation of the company? All right. So you need to consider the impact of that. How so? Is it going to impair the reputation? All right. Or is it going to enhance the reputation of the company? All of this is one of the factors that you need to consider. Then number two, what is the perspective? What is the perspective of the company shareholders on the closure decision? It may well be that it's one of the shareholders that introduced the product that you want to delete. All right. And that can, if you decide to delete the segment or the product without bringing management or without bringing shareholders into, without notifying the shareholders, it may bring about bad blood among the management team. It can even resort to organizational politics, because it simply means that you are jettisoning the idea of a shareholder, of one of the shareholders, and you want to avoid anything that will create a kind of bad blood among the shareholders or even the management team as well. All right, and that's why before the final decision is taken, all relevant stakeholders must be aware of the decision that is to be taken. All right, then number three is the impact of the closure decision on the company's overall turnover, especially if the product is jointly demanded with the company's other products. Okay. In the other time that I mentioned, here we have products A, B, and C. All right. We have product A, B, and then product C. Now this company is thinking of closing down product B because product B is operating at a loss. If, say for example, product B and C are jointly demanded, meaning that customer will not buy product B without product C. Customer will not buy product C without product B. So when you have this kind of a situation, how will it impact? Of course, certainly it will impact the company's turnover. Therefore, you want to know the effect of the closure decision on the company's overall turnover, especially where the targeted segment is jointly demanded with the company's other products. Okay, you want to know how that will impact the overall turnover, the revenue of the company. That's number three. Then number four, what will be the interpretation and reaction of the company's creditors? So how will the company creditors and then how are they going to interpret the closure decision? All right, people that have borrowed the company money to finance its operation. So if you say you are no more producing that particular segment upon which you have borrowed loan, okay, so how would they react? How would they interpret it? And that's why we're saying that you must consider engaging all relevant stakeholders before final decision is taken. Then number five, you also need to consider the impact of the closure decision on workers' morale, especially as it relates to productivity. All right. What do I mean by this? What do you mean by workers' morale? Now, when you delete a particular segment, remember, all these segments within the organization are being operated by workers. Now, if you now delete the affected segment, you don't want to produce it again, certainly it will affect workers' morale. What do I mean by workers' morale? The workers that are working on the segment that you want to delete, all right? Maybe you ask them to go, or you want to redeploy them, Or let's say in this case, you want to sack, you want to ask those workers to go because you are no more producing the segment they are supporting. The workers that are operating in other company segments will become apprehensive of job loss, all right? Because they will think that, okay, if today our company is saying, the company is saying our colleagues should go because they are no more producing the other segment. So what will be our fate tomorrow that the company can also come up to say we too should go because of similar situation? So because their morale is at the lowest level, that will affect productivity. There will be no motivation to work during that period. And this is what we are saying. What will be the effects of the closure decision on workers' morale as it relates to productivity? That's number 5. Then number 6, another point is that the affected workers on the segments, will they be redeployed or will they be retrenched or redeployed? If the company is going to redeploy them, is the company going to incur any training or retraining costs? If you are going to retrench them, at what cost? So these are some of the factors we also need to consider. Another factor is that the company must consider the impact or the level of negativities that the closure decision can bring to the organization in relation to litigation and the compensation to the affected staff. Okay, because if you delete a particular segment, if the company has workers union, the union may rise up against the organization, and that may create a level of a kind of negativity for a bad image for the company, and you want to avoid it. You want to avoid such occurrence. Not only that, it may resort to litigation or disputes, because the affected staff can sue the company that they were asked to go. They were asked to go illegally, and then in this case, media can come up and with any different kind of story. Before you know it, all the media outlet will pick the story, and then the name of the company will be dragged in the mud, and every responsible organization, we want to avoid this kind of a scenario. So these are some of the factors you need to consider in relation to deleting of a segment. So at this point, we need to have illustrations. We need to have illustration. Let me know if you have any question for me so far. Being the only one talking, let me hear your voice. Okay? Let me hear your voice. Online, who is this person? Your name is Dash. You don't have a name. Anyway, I can see Lekon, Adiola, Ademoso, Rilwan, Ado. I can see all of you. I need you to speak to me so that I'm not the only one speaking. Yes, are you guys with me?
Yes, sir, we are
with
with
you.
you.
Sir.
Yes, sir, we are with you, sir.
We are with you.
All right, then. All right, thank you.
We are with you, but your life is not easy.
My what?
Your life is not easy yet.
Oh, okay. So that should be Mr. Ibrahim. I understand. All right. So let's have illustration. So like I said, my plan today is to complete anything that has to do with deleting of a segment. So we are going to solve this short example. Then thereafter, we are going to solve another one. We solve this. For a while, ICAN has not tested deleting of a segment in recent time. What is common so far is special order as well as a make or buy decision kind of questions. All right. In any case, let's start with Adiboluja. So somebody is raising hand. You have dropped it. Okay, no worries. Now, I need somebody to read for us illustration number 1. In your material, go to page 32, illustration number 1, Adigboluja. Somebody should help us. Who's reading for us? Yes. I want to hear your voice. Who is helping us to read? Okay, let me look for one of you. I can't see this guy in the what's his name again? Samir, you are not in this class today. No worries. Yes, Olalekan, you can read. You are the first person on the list. Let me start with you. Lekon,
Okay.
go
Yes,
ahead.
sir. Adigboluja manufactures 3 brands of ice cream,
You can stay
chocolates.
closer to your speaker.
Okay, sir. Is it clear now?
Go ahead.
Is it clear this way?
Go ahead, we manage it.
Okay, sir. Adigboluja manufactures 3 brands of ice cream, chocolate, vanilla, and strawberry. The present net actual annual income from this is, all figures are assumed to be correct. The company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. So it is felt that selling prices cannot be raised or reduced without adversely affecting income. 5,000 naira of fixed costs of vanilla are direct fixed costs, which would be saved if production ceased. All other fixed costs will remain the same. Required. Should the company drop the sales of vanilla? B. Suppose, however, it is possible to use the resources realized by stopping production of banana and switch to producing a new ice cream, banana, which would sell for 50,000 naira and incur variable cost of 30,000 naira and extra direct cost of 6,000 naira. Will your earlier decision in above remain the same? See, what are the non-quantifiable factors that the management of Adibuja should consider?
All right, thank you, Lekon. Yes, that is the question. In the A requirements, you are to advise whether Adigboluja should drop the sale of vanilla. When you look at the question, the Adigboluja manufactures 3 different products, 3 different brands of ice cream: chocolates, vanilla, and strawberry. So the company is now asking you whether the company should drop the sale or whether they should drop the sale of vanilla. When you look at the income statement given to you, you will notice that vanilla is operating at a loss. Vanilla is operating at a loss of 3,000 naira. And that is why the company is thinking of closing down or of dropping the sales of vanilla. Therefore, what are you supposed to do? What should be your advice? Before you provide advice to the management, you need to analyze the economic angle of vanilla. Taking this into consideration, the benefits arising from vanilla versus the relevant cost of producing vanilla, whether vanilla will contribute positively or negatively towards the recovery of the company's general fixed overhead and net profit. Therefore, let's stop sharing this and then move to the working notes. Okay. This is solution. So illustration 1. Page 32. The name of the company is Adigboluja. Okay. And the examiner is asking you to advise whether they should drop the sale of vanilla. Okay, so what are you supposed to do? First thing first, you need to carry out the economic analysis of the affected segment. Remember, we said the economic angle of the decision to delete represents the process of comparing the cash inflow or the benefits arising from the segments with the associated relevant costs, whether it will result in a positive or negative contribution using contribution margin approach or income statements. All right, so that's what we want to do now. I will then see number A. Examiner did not ask you to, they did not mention what you are supposed to use. So you can say income statement, you can call it income statement or contribution margin statement. Whichever one you call it, it's still the same thing. So you say income statement for vanilla. Remember what I said, your focus is on the affected segments. All other segments, you are less concerned with them. So just focus on the affected segment. So we create two different error signs. From the format, the first item will be the sales value. I will then go to the question, what is the sales of vanilla? According to the question, the sales of vanilla is 40,000 naira. At times, the sales value may not be given to you, but there will be information for you to be able to determine the sales value. So just multiply the units sold with the selling price, you get the sales value. So you then compare this with the relevant cost of making the segments. Now, under the relevant costs, all those direct costs like direct material, direct labor, direct expenses, variable overhead, opportunity costs, any other relevant costs, for example, direct fixed costs, relevant fixed costs, incremental fixed costs, attributable fixed costs, specific fixed costs, any fixed cost that is relevant to the calculation, that is relevant to the segment, you must consider it. All right. So, but it is not in all cases you are going to see all of them in a question. What is important is that just identify relevant costs. The same way we have done under relevant costing as a topic, the same way we have determined relevant cost of material, relevant cost of labor, any cost that is relevant to the segment, you have to consider it under the relevant cost. So I will then go back to the question, what are the relevant costs given to us? We are given variable cost of 25,000 naira. Okay, so I will then come here, variable costs. Remember, variable costs are direct costs or marginal costs. So we have been given as 25,000 naira. Then I will go back to the question in case I have other relevant costs. So when you look at the paragraph after the table, you are told that the company is concerned about its poor profit performance and is considering whether or not to cease selling vanilla. The company is thinking of closing down vanilla. It is fact that selling prices cannot be raised or reduced without adversely affecting income. 5,000 of the fixed costs of vanilla are direct fixed costs. Direct fixed cost is a relevant cost. You have to consider it. So your examiner is telling you that out of this 18,000 naira out of the fixed cost of 18,000 naira for vanilla, 5,000 of it is direct fixed cost, which will be saved if production ceased. All other fixed costs will remain the same, that is, will not change. So you are given the direct fixed cost of 5,000 naira, then that is relevant. So I will then call me direct fixed cost, 5,000. So let's go back in case we have other information. So that's it. That's it. No other information again. So you then add it up. This, the total of that is 30,000. 30,000, 40 minus 30,000 will give us 10,000. This is called positive contribution. This is positive. This is positive contribution. All right. So in the question examiner is then asking you, should the company drop the sales of vanilla? So that means you need to advise. So I will then come here. Advise. So because we have a positive contribution, our advice should be that the Adigboduja should not drop the sale of vanilla. So how do you put it down? So let's do it. Adigboduja should not drop the sale of vanilla should not drop the sale of vanilla. Why? That is not sufficient for you to just say Adigboduja should not drop the sale of vanilla. Why should they not drop the sale of vanilla? So you can proceed. Okay, Adigboduja should not drop the sale of vanilla since it is contributing positively towards the recovery of the company general fixed overhead and net profits. Okay, so that's our advice, because the decision rule is that once the segment produce a positive contribution, then the company should not delete it. So that's that. So let's move on. The number B part of the question. Before we move to B, if you have any concern or anything that is not clear to you, please always raise your hand. Then I will provide clarity. So number B part. Suppose, yes, Ado, what's your question?
Yes, sir. We have contribution in the company in the table, and we have fixed costs too. Are they not relevant to the calculation, sir?
No, they are not relevant. You follow the formats. All right?
Okay, sir.
Yeah. Then number B part of the question you are asked, suppose, however, it is possible to use the resources realized by stopping production of vanilla and switch to producing a new ice cream, banana, which will sell for 50,000 naira and incur variable cost of 30,000 naira and extra direct fixed cost of 6,000 naira. Will your earlier decision in A above remain the same? So, what is examiner asking you to do here? You are supposed to prepare another income statement for banana. Then, of course, at the end of the day, you are supposed to compare the contribution of both you compare the contribution of banana with the contribution of vanilla. So if contribution of banana is higher than the contribution margin of vanilla, then you can say the company should go ahead to switch to producing banana. But if the contribution of banana is less than the contribution of vanilla, the company should not switch resources. But first thing first, before you can advise, you need to prepare income statement for banana. So number B, income statement for banana. Okay. So you pick the sales value of banana. You have been told that banana will sell for 50,000 naira. The company will incur variable cost of 30,000 naira, and there's a direct fixed cost of 6,000 naira. So here is 50,000. We compare it with the relevant cost of producing the banana. So we are given variable costs of 30,000 naira. We're also given direct fixed costs of 6,000 naira. When you add the two together, we are going to have 36,000 naira. So 50,000 minus 36,000 will give us 14,000. This is positive contribution. Okay. So examiner is now asking you whether Adugboluja should switch resources of producing vanilla to producing banana ice cream. All right. So you can see that our total contribution for banana of 14,000 is higher than the total contribution of 10,000 for vanilla. Therefore, they should switch resources. Then come here, advice. We can say banana ice cream. Banana ice cream produce a higher contribution, a higher positive contribution margin of 14,000 naira relative to the contribution margin of vanilla ice cream. Relative to the contribution margin of vanilla ice cream of 10,000 naira. Therefore, Adigbolija, Adigbolija. I think I wrote Adigbolija the other time. Let me check. Yeah, this is Adigbolija, not Adu. It's Adigbolija. Okay. Therefore, Adigbolija should switch the resources of producing vanilla to producing banana to earn additional contribution or profits of 4,000 naira. That is 14,000 naira minus 10,000 naira. That's it. That answers the B part of the question. The final part of the question is number C. You have to provide the non-quantifiable factors that the management of Adigbolujah should consider. All right. So before I move to the C part, let me know if you have any question for me. Like I said, always raise your hand if you have any concern or anything that is not clear to you. Yes, Martha, talk to me.
Yes, good evening, sir.
Good evening.
Okay, sir, I just wanted to confirm, like the A part, they gave us fixed direct cost. Is it possible that under the additional information, they give us fixed cost? Will it be relevant or it will be irrelevant?
Fixed cost, it depends. If you are just given fixed cost, it is not relevant. Any cost that will not change as a result of the decision taking is irrelevant. Just ignore it. But if you are given direct fixed cost, if you are given incremental fixed cost, if you are given attributable fixed cost, if you are given specific fixed cost, these are relevant fixed costs you must consider because they are specific to the segment. You can trace it to the segment. All right. So those are the only fixed costs that you are going to consider. But if you are just given fixed cost, you don't need to use it. It's irrelevant. Ignore.
Okay,
Okay.
sir.
Yeah.
Okay, sir. Thank you.
So we have to state the quantifiable factors. I would then say quantifiable.
Sorry, sir, my hand is up, sir.
Factors. Yes, Tosin, talk to me.
Yes, yes. Okay, so I just my own is confirmation actually. So, after the B parts that we mentioned that we have a better profit of additional profit of 4,000. Will it be also good to now recap as well that the 3,000 deficit that we've seen in vanilla earlier will turn to positive? It was poor profit, then it will become maybe a good profit of 1,000 naira. Is it good to add that point as well?
That the profit of the negative for 3,000 they have before
will turn to
positive for 1,000, right?
Yes.
So, well, if you had it, that's not anything that will enhance your contribution. Anything that will enhance your performance is allowed. But the bottom line is that don't go too far. All right. The more you are trying to express yourself, the more you may comment on something that is unnecessary to your calculation. Because in this question, the examiner is asking you whether they should switch resources to producing vanilla to now producing banana. So the bottom line is that there is an indication that the company will make more profits if they switch, then they should just advise them to switch. So, but the bottom line is that the final thing is that it's not compulsory that you are going to express yourself the way I do it. Every diet, I don't say the same thing. Is the way I think about it is the way I will write it down. So it's not something you can cram. And that's what I said the other time, that you must understand the basics so that you can easily express yourself the way you want. All right. And when you are making recommendation or advice, don't make it too bulky. Don't make it too voluminous. Just straight to the point and then move on from there. All right, Tosin?
Very clear, sir. Thank you.
You're welcome. Then Chioma Beauty, talk to me. What's up?
Good evening, sir.
Good evening.
Sir, please remember during operating costing, operating statements using marginal costing, it does not
Yeah.
fixed costs.
Pardon?
If this calculation different from calculating using marginal costing under operating statement?
It's not the same thing. We are
Okay.
using the concept of marginal costing under the decision making. The format you are given under operating statement is not the same thing here. You know, in operating statement, your focus is to determine profits, isn't it? You want to know whether you want to prepare profit or loss. That's why you are
Yeah.
using income statement under the operating statement. So it's different from here.
Okay.
All right. So the only thing we are using here, we are just applying marginal costing technique to aid managerial decision. So you are not preparing profit here. What you are trying to do is what are you going to do if you want to discontinue a segment? What should be your decision? And that's what we're trying to achieve here. All right.
Clear, sir. Thank you.
You are welcome. Yes, one other person is raising hand. That's Ramon. Ramoni, talk to me.
Yes, sir. Good evening, sir.
Good evening.
So my own question is, when we from the question we just solved now, we made the decision based on the economic angle. At what point are we going to use the quantitative angle? Let's say a question now, we are given a question and the contribution tends to be negative. So, and
I didn't get that. I didn't get the last part. Check it again,
we
Ramon.
advise, you have given us the decision angle. At what point are we? I want to know in our decision, or let me say in our comment.
Yes.
Let's say in an example, in the economic angle.
Yes. I don't know whether it's my
and we
network.
discover that the contribution is negative.
We discover that the contribution is negative. Then, yes.
Yes. The decision rule is that we should advise the company to delete the segment. But at what point are we going to use this quantitative angle to advise?
See,
Yes.
what we are saying is that whether examiner asks you or not, for you to be able to earn your full mark, you have to state your qualitative factors. That's the bottom line. Whether examiner asks you or not, you must state your qualitative factors. But in this question number C, you are asked to state your qualitative, irrespective of whether it is positive or negative. You must state your qualitative factors. All right.
Okay.
If examiner asks you to do it, you state it. If you are not asked to do it, you state it for you to be able to earn your full mark. All right.
Okay. Okay.
All right. So,
all right, sir.
In this particular question, we then need to go ahead to state our qualitative factors as required. So you can then say the following qualitative factors should be considered. The following quantifiable, or sorry, I say quantifiable. This is non-quantifiable. The following, this is, let me put it, non-quantifiable factors. So the following qualitative factors should be considered in relation to vanilla. Remember, we have advised management that they should discontinue producing vanilla ice cream. So before the final decision is taken, we need to states these qualitative factors. So let's think it through together. They want to discontinue producing vanilla. What are those factors we need to take into consideration? Number one, so we are doing it together. Remember what I said. When you are stating your qualitative factors, you have to link it with a question. Don't make it generic. Don't just cram and don't just memorize and dump it on the day of your exam. You must link it with a question. So I will give you one. Then I will expect that you are going to give me the rest. Okay? Let me start with the revenue. Okay? Adigboluja should consider the impacts of the closure decision, the impact of dropping the sales of vanilla on the company's general turnover, on the company's overall turnover, especially if vanilla ice cream is jointly demanded with other ice cream brands, Okay. So what are we trying to say here? For that's what I said. Qualitative factor is not something you can just cram and dump. So it has to relate with the question. So you can see in this particular point I just made, I mentioned the name of the company. I mentioned the name of the affected segment, which is vanilla. All right. So I also talk about the other brands of the company's products. So this is the way you are supposed to state it. Now, here we are saying that the company should consider the impact of dropping the sale of vanilla on the company's overall turnover. So what we are saying is that, we are talking about ice cream. Some customers, they prefer to they prefer to combine two different flavor of the ice cream. Let's say, for example, in this particular question, we have strawberry, we have chocolate, and we also have vanilla. Now the company is saying they don't want to be producing vanillas again because vanilla is operating at a loss. And then, so we want to introduce banana. So some customers, they like vanilla. So if they want to buy ice cream, for them to be able to patronize the company, they can combine, for example, chocolate with vanilla or chocolate with strawberry. So if this company is now saying they are not going to produce vanilla again, that means those customer segments that prefer vanilla, they won't come to and buy ice cream again from this company. They have to go to the competitor where they can get vanilla and other mix together. All right, so that's the implication of this. So before the final decision is taken, the company must consider the impact of the closure decision on dropping the sale of vanilla. That's point number one. Then point number two. Yes, who can give us point number two? And when you are stating your points, remember to relate it with the question. Don't make it generic. Okay, talk to me. Yes, if you know it, if you have any point to make, then just raise your hand. Let's do it together. Yes, Olushola, talk to me.
All right. Good evening, sir. So
Good evening.
another point I think we can Adigbolu should consider is the fact that if they drop sales of
Vanilla.
vanilla, yes, it could affect workers' morale in other departments too. If you are looking at it, that other products that they are producing, which is chocolate and strawberry.
Chocolates. Yeah.
Yes, chocolate and strawberry. And if the staffs in this department sees, okay, if Adigbolu shut down vanilla, the morale of these other two uh, departments starts
Brands.
working there. Yes, the morale will actually drop.
Yeah.
Thinking that
It's a valid point.
if yes, thank you, sir.
Yeah, that's a valid point. So let's put it down. So I would then say, we say that Adigboluja, the company, so that we don't just be repeating Adigboluja, the company should consider the effects of dropping the sale of vanilla on workers' morale, because the existing workers on other brands, or let me just say, the existing workers operating on chocolates and strawberry. That's not correct. Strawberry may become apprehensive of job loss. And this may impact the workers' morale. This may impact productivity, may become apprehensive of job loss, and this may impact this may impact productivity negatively. So that's it. You see the way we carve it? Like I said, that doesn't mean this is the way you are supposed to do it. What is important is that don't make it too generic, and then don't make it too wordy. Just go straight to the point and then move on from there. All right? Yes, somebody raised hand the other time. Okay, the person has dropped it. Okay, Chairman Beauty, talk to me.
So, sir, number three, I think if they drop it, considering the fact that it's not making loss, it will also affect the net profit of the company.
So what's the point? Yeah.
The point for me, the point is that they should continue, since it will help in taking care of the overhead costs, fixed overhead costs, since it's not affecting the net profit. Is also
Yeah,
impact.
you have a valid point, because vanilla is not operating, is contributing positively, right? But the
Yes.
challenge with the company is that they don't have sufficient resources. So for them to be able to undertake 4 different brands at the same time, and that's why they are looking for a way of removing vanilla so that they can introduce banana. So, but if the company has sufficient resources to undertake the entire 4 products or 4 brands, then it's a valid point. But in this situation now, we can't make that point, which will not work, right?
Okay, sir.
Yeah. So yes, who again? Ridwan. I have Ridwan, I have Efe, I have Tosin. Okay. Yeah, let me take one more from you. Yes, Chidera, Martha, Tosin, Rilwan.
Yes,
What?
Okay, sir.
sir.
Yes.
Okay.
Go ahead.
Okay, sir. So I think Adigboluja should consider the creditor's side before they make the company's decision, because it will actually tell on the shareholders of the company before the closure decision of vanilla ice cream, sir.
Okay, so what you are saying is that the perspective and the reaction of the company's creditors should be
Yes, sir.
taken into consideration.
Consideration.
Well, as far as the question is concerned, examiner did not mention that, okay, if this will relate to, you can include it, but I don't see any reason why we should comment on creditor in this case, particularly for the fact that the product is not something that is so significant for the company to borrow loan and for them to be able to talking about the creditors. So the situation, the scenario of the question will tell you what kind of the qualitative factor that you should bring to bear. All right. So the issue of creditors' reaction on perspective may not work in this system. But another one you mentioned is the shareholders. Yes, the perspective of the shareholders should be considered before the final decision is taken. So let's put it down. We can say the perspective the perspective of the company's shareholders should be considered before final decision is taken. The perspective of the company shareholder should be considered before final decision is taken on the closure of vanilla. Okay, that's it. See the way I reframe it? Instead of saying the perspective of shareholder, the perspective of the shareholder should be considered in relation to the closing decision. So all of this, you must find a way of expressing yourself. Yes, let's add one more. You know, we are talking about ice cream. We have not considered the perspective of the customer taste and preference. Okay, we also need to include it. Customer's taste and preference should be customer taste and preference in relation to vanilla ice cream should be considered. Okay, what are we saying here? You know, when you talk about ice cream, like I mentioned earlier, there are some customers that they like vanilla flavor. Some don't like vanilla, some like strawberry. There are some customer segment that they prefer chocolate. So customer taste and preference differ. Therefore, those customers that like for me personally, when I used to eat ice cream, I like vanilla. I like vanilla, you know. So if I want to buy vanilla in your company, you are telling me that you don't sell it again. After all, you are not the only one in the market. I will go elsewhere. I will go elsewhere and put and buy whatever I need from there. All right. So God help you. I can also tell my other friends and colleagues or whatever that okay, this particular company is I wanted to buy ice cream today. I can even go on social media. Yes, that's the power of social media. I can go to social media to want to just to generate visibility to say, okay, today I went to company XYZ to buy vanilla ice cream. On getting there, I was told that they are no more selling. Well, I don't care. So I have to go to so place to get my yummy vanilla ice cream. I've made a comment. You see people coming on the same on my timeline to making comment on the same issue as well. So company wants to avoid this kind of a thing. All right. And that's why we are discussing this in class. So that if you have the opportunity to advise the management. And these are the things you need to take into consideration. It's not just about the exam. It's not just about the exam. This is real life. Because as a customer, I like vanilla. I like to mix, at times I will mix vanilla with a strawberry or chocolate. So if I don't have that vanilla, that means it's like, I don't, in fact, there are some customers, they don't like the taste of banana. They don't eat banana. Anything that has a taste of banana, they don't like. In fact, it can cause them anything. It can cause negative effect on their system. It's as bad as that. And so that's why company must be very careful. Company must be very careful. Anything that has to do with product, you must be very careful in relation to your brands, the brand of the kind of ice cream you dish out to the customers. Yes. Number 5, somebody is talking about litigation. Let me see. That will be the last point on this. Let me go back. Let me read your message. Ahmed Jami was saying that the effect of litigation that may come from staff being used to produce vanilla needs to be considered. The effect of litigation that may come from staff being used to produce vanilla. Okay, let me reframe it. Let me reframe it. If Adigboluja eventually, or how would Adigboluja undo how would Adigboluja undo the negativity, undo any negativity including litigation that may arise after dropping the sales of vanilla. I'm even careful of this issue of litigation. Instead of that, we can say, how would Adibolja handle any negativity that may arise after dropping the sale of vanilla? Because like I mentioned the other time, customers can go on social media and be lashing the company. That's, don't mind that yeah company. I wanted to buy ice cream today and they said they are no more selling vanilla, which is my choice. Well, I people no mind though. I went to social place and I get my yummy ice cream, you know. Customer can be funny at times, you know. So these are the things we are talking about. But in any case, if you put litigation, nothing, it's not bad. But it depending on because ice cream, I'm trying to be careful on the comments. Ice cream is not something that is too capital intensive or that can bring so much issue of negative, litigation. But again, it's part of it. Let's leave it like that. Of course, we can also talk about whether Adigboluja will incur additional cost, whether Adigboluja will whether the company will retrench or redeploy the existing workers that are supporting the vanilla ice cream. Another point is that would Adigboluja incur additional costs relating to training and retraining of the staff, okay, of the staff that will be redeployed. So these are some of the, if you can mention 3 to 5, you are good to go. All right. So I think that this is okay. Let's stop it here so that we can move to another question. All right. So that's that. I believe you get the message. You get the message. So when you are talking about the qualitative factors, you just have to link it with a question. Don't cram, don't make it generic. Just think about what could happen if the company closed down the particular segment. All right. So I believe the message is clear. So at this point, let's have one more calculations, one more illustration on this. I will stop sharing, then move to the material. Yes, let's solve example number 2. If it's Sinachi. Yes, who is helping us to read this one?
If it's not making a single file,
Are you reading, Larry?
oh, whoa.
Yeah,
Okay,
yes,
yeah.
that's the consequence of murmuring in my class. Yeah, now read.
Okay. If it's Nachi Limited, making a single product as a factory in Lagos and distributes the product through trip depot in Lagos, Benin, and Kaduna, it is estimated that during the coming year, 100,000 units will be manufactured and sold at the price of 20 naira per unit. The sales being spread as follows: Lagos 70 units, Benin 20 units, Kaduna 10,000 units. Standard cost of production are direct materials 4.8 naira per unit, direct wages 3 naira per unit, factory overhead, variable overhead 140% on direct wages, factory fixed overhead 400,000 naira per annum. So the cost of selling and distribution incurred by the depots are estimated as follows: fixed cost, Lagos 80,000 naira per annum, Benin 50,000 naira per annum, Kaduna 30,000 naira per annum. Variable selling expenses are Lagos 5% of sales value, Benin 8% of sales value, Kaduna 10% of sales value. From the budget for the business prepared from these figures, management is considering desirability of closing the depot and selling organizations in Benin and Kaduna. If this is done, it is expected that all sales in these areas will be lost, but that sales in Lagos will remain unaffected. Requirement: A, prepare a budget for the business from the figures provided, indicating why management is thinking of closing the depot in Benin and Kaduna. B, redraft the statement prepared above using contribution margin approach. C, prepare a statement using the historical approach to show the net profit of the organization after closing down the two depots. Advise the management based on the income statements prepared above. Full
All right,
stop.
thank you very much, Larry. So that is the question. In the A requirements, you have to prepare a budget for the business from the figures provided, indicating why management is thinking of closing the depots in Benin and Kaduna. Now, from this requirement, something should tell you that this question relates to deleting of a segment. Why did I say so? Because examiner has told you that management is thinking of closing the Benin and Kaduna depot. All right, this is a deleting of a segment. So what am I supposed to do in this question, in this particular requirement? Examiner is telling you that you should prepare a budget indicating why. When you look at this question, you will see that we are not given a income statement to show profit or loss, to show the reason why management is thinking of closing Benin and Kaduna depot. And that is why the examiner is asking you to prepare a budget indicating why management is thinking of closing down Benin and Kaduna. So what this simply means is that you are supposed, the first thing in this A requirement, you are supposed to prepare income statement. You know, it is from the income statement you are going to see profit or loss. So you see profit or loss for Lagos, Benin, and Kaduna. So this is what the examiner wants you to do. All right. So you are not asked to make advice. Examiner did not ask you to make advice in the A part of the question. You are required to prepare a budget indicating why management is thinking of closing Benin and Kaduna. That is, prepare income statements. Your income statement will show profit or loss for each depot. That's what we need to do. Therefore, let me stop sharing this and move to the working notes. Here is solution to illustration 2. This should be page 33. Let me confirm. Still on page 32. Okay. The name of the company is Ife Sinachi Limited. All right. So examiner is asking you to prepare. You are required to prepare a budget indicating why management is thinking of closing Benin and Kaduna depot. All right. So, like I said, you are supposed to prepare income statement, but examiner said budget. So I would then say number A, budget statement. Here. Now, we create a column for Lagos. We create a column for Lagos, Benin, Kaduna, and the company as a whole, that is total for the entire company. According to the question, let's restrict our numbers to our calculation to thousands. So according to the question, we are told that the company will produce 100,000 units. Let me go back to the question. In the first paragraph, we are told that it is estimated that during the coming year, 100,000 units will be manufactured and sold at a price of 20 naira per unit. The sales are being spread as follows. So look, Lagos will sell 70,000 units. Benin will sell 20,000 units, and then 10,000 units is attributable to Kaduna Depot. Okay, so I will then come here, units, Lagos, units in thousands as well. Lagos is 70, Benin is 20, Kaduna is 10, total is 100,000. Okay, let me write this Benin, it's not clear. All right. So our figures are in thousands. So the first item here, for us to be able to prepare our income statement, the first item will be the sales value. The same way you normally prepare income statement under the operating statements using marginal costing approach. So the same way you are going to do it, but all those categorization, like saying sales, production costs, the less closing stock, all those ones are not needed in this case. So I will then go to the question. We are told that selling price is 20 naira. So selling price at 20 naira. So since selling price is 20 naira, 20 multiplied by 70 will give us 1,400. 20 multiplied by 20 will give us 400,000. 20 multiplied by 10 will give us 200,000. 20 multiplied by 100 will give us 2,000 for the organization as a whole. So immediately after the sales value, we consider relevant cost. So after the relevant costs, under the relevant cost, I will go to the question, am I given direct material? Yes, here I can see direct material of 4 naira 80 kobo. So I will then say direct material at 4.8, 4 naira 80 kobo. So to get the relevant cost, the total direct material cost for Lagos, this will be 4.8 multiplied by 70. 70,000 units is produced, so multiply by 4.8. That's 336. Here will be 336. It's a cost, so put it in brackets. Then for Benin, Benin will be 4.8 multiplied by unit produced, which is 20,000. What's wrong with you? That's 232. Let me do it again. 20 multiplied by 4.8. What's wrong with my calculator? 0.8. That's 96.
96, sir.
This is 96. So put it in brackets. 4.8 multiplied by 10, that will give us 48. 4.8 multiplied by 2,000, that should be, sorry, multiplied by 100, that's 480. It's 480. So we are done with direct material. In the question, we're also given direct wages. How much is direct wages per unit? That's the 3 naira per unit. So 3 multiplied by 70 will give us 210. 3 multiplied by 20 will give us 60. 3 multiplied by 10 will give us 30. 3 multiplied by 100 will give us 300. So we are done with direct wages. We'll go back again to the question to go and identify other relevant costs. We have factory overhead, factory variable overhead, 140% of direct wages. Factory overhead, factory variable overhead, variable overhead at 140% of direct wages. All right. Let me do it this way. Direct wages, I will call it GW because I want to make reference to it, which is 3 naira. All right. So 140% of direct wages. So for Lagos, direct wages is 210,000 multiplied by 1.4. 140% is the same thing as 1.4. That's 294. For Benin, 1.4 multiplied by 60. That's 84,000. Then for Kaduna, 1.4 multiplied by 30. That's 42. The total, which is 300,000 multiplied by 1.4 equal 420. So we have accounted for factory variable overhead. The next one will be, let's go back to we are also given factory fixed overhead of 400,000. When you look at this factory fixed overhead of 400,000 naira, please pay attention. This is general fixed overhead. It's not related to any of the depot. It's not this 400,000 does not relate to Lagos, Benin, or Kaduna. It is general fixed overhead because this is not specific overhead. This is not attributable to any of the depot. Therefore, it's not part of the relevant cost. But when we want to determine the profit, we need to consider it. Okay? So for now, we are going to ignore that. Let's go back again in case we have other relevant costs. So we're also told that the cost of selling and distribution incurred by the depot are estimated as follows. So we also have selling expenses. Selling and distribution expenses are relevant costs, so we should consider it. So I will say selling and distribution. For Lagos, selling expenses is equal to 80,000. So here is 80,000. Let me frame that because we are told that selling expenses are in two folds. We have fixed selling and variable selling. Both of them are relevant. Let me rewrite this one. First thing for, let's start with the variable selling expenses. So I will say variable selling and distribution. Working number 1. Let's go and do our working. Then after that, we come back for fixed selling and distribution, which is 80,000, 50,000. Oh, sorry, 80,000, 50,000, and then 30,000. Total is 160,000. Okay, so let's go and do working for variable selling and distribution expenses. So this page, another page, let me see, on the requirements. The B part, you have to redraft the statement. Then it's C part, you have to prepare another statement. So that means we are going to have 3 different pages for our statements. This should be for this for this, then working. All right. Working number 1. We want to determine variable selling and distribution expenses. In the variable selling and distribution expenses, examiner is now telling us that variable selling expenses, Lagos is 5% of sales, Benin 8% of sales value, Kaduna 10% of sales value. So for Lagos, we are given 5% multiplied by the sales. Sales of Lagos is 1,400. For Benin, 8% multiplied by 400,000. Then Kaduna is 10% of the sales value of 200,000. Therefore, let's multiply 5% 0.05 multiplied by 1,400 equal 70,000. 32,000, 8% of 400. Then 10% of 200 will give us 20. So we then add it up to get the total variable selling and distribution expenses. That's 122,000. So let's go and post. Variable selling. Here is 70,000. 32. Then 20. And we got 122,000. Okay, so let's go back to the question. Any other relevant costs? Let's go and identify any other relevant costs. So from the budgets for the business prepared from these figures, management, so there's no other cost again, apart from the factory fixed overhead, which we said is a general fixed overhead, not relating to any of the products. So you only consider the fixed overhead when you want to determine profit. So at this point, let's determine our contribution. The difference between sales and total relevant cost will give us contribution. So let's determine that quickly. Let's be fast so that we can complete on time. So here is 1,400, 1,400 minus 336 minus
Lagos is
210.
410. Lagos is
Lagos
410.
is 410, okay. 410. So this represents contribution. Yes. What about Benin? Pick it one by one so that it will be faster. Somebody should be doing the total.
Benin is 78.
Benin 78, okay?
Kaduna 30.
Kaduna is 30. Okay.
Kaduna is 30, okay?
Total 518.
518 is the total. 518,000. So that's it. Thank you, all of you. So let's move on. Now that we have our contribution, from this contribution, you are supposed to less fixed cost to get the profits. Therefore, if I like, there's no need for you to say period cost like you normally do under the operating statement. You know, using marginal costing approach, immediately after contribution, you need to less period cost. But in this case, no need for all those categorization. So just come here and say fixed overhead. Why are you not connecting? Won't start to start. So I will say fixed or factory fixed overhead. Let me check. What are we told? Factory fixed overhead. There. Working number 2. Now pay attention, please. When you look at the factory fixed overhead, like I said, it's not attributable to any of the depots. This factory fixed overhead, you cannot say it relates to Lagos. It doesn't relate to Benin or Kaduna. Therefore, it is called general fixed overhead. Because you want to determine profits, therefore, you need to apportion this fixed overhead among the 3 depots. Now, what are you supposed to do? How do you apportion it? Examiner did not tell you how you are going to distribute the fixed overhead of 400,000 naira. So in this situation, the most important thing you need to do is to go into the question and identify anything that you think, anything that unites or that is related to any of the products, any of the 3 depots, anything that relates to them or that combine them together or that unite them together. That's what you are going to use to distribute it. In this question, the examiner was very clear. We are told that the company will produce and sell 100,000 units. The company will manufacture and sell 100,000 units, and the sales being distributed at 70,000, 20,000, and then 10,000. So we are going to use the sales volume to distribute the factory overhead of 400,000. So if sales volume is not given to you in the question, you can use the company sales value. At times, examiner can tell you to use number of, there are different ways you can distribute, you can apportion overhead. You can use number of employees in each department. You can use floor space. There are different ways of apportioning overhead. But in this particular question, we are going to use the sales volume. So let's go and do working for apportionment of the sales volume. Working number 2. Factory fixed overhead. Okay. So the factory fixed overhead, according to the question, is 400,000 naira. So this 400,000 naira, we are going to distribute it among the 3 depots. We will distribute it among the 3 depots. So how do you do this? we have identified that we are going to use the sales volume because the sales volume is common to the three depot. Therefore, I would then say distribution, or you call it apportionment. So we have Lagos. Lagos produce 70,000 units. 70,000 units over the total unit of 100,000. Then multiply by the 400,000 that you want to apportion. So this will give us
280.
280. This is not needed. So I will come here equal to 280,000. Then we have Benin. Benin produced 20,000 units out of 100,000 units. So you multiply the fixed overhead of 400,000. This will give us 80,000, right? Then we also have Kaduna. Kaduna produced 10,000 out of 100,000. You multiply with 400,000. This will give us 40,000. So you then add everything together. So this will make the 400,000 total. Okay. So let's go and post. The essence of considering the fixed overhead is to determine your profits. Fixed overhead is not relevant cost, but for us to be able to determine profits, that's why we are deducting fixed overhead. So here is 280, 80,000. Is it 280, 80,000? 20% of, let me confirm again.
40.
40. Yeah, 40,000. Yeah. So total is 400. So there's no other cost again, no other fees. If you have other fees costs, you also deduct. So at this point, let's find the profits or loss. So I will then come here, profits, net profits, or loss. 410 minus 280, that's 130,000. 78 minus 80 minus 2. 30 minus 40 minus 10. 518 minus 400, 118. So examiner is asking you to prepare a budget indicating why management is thinking of closing Benin and Kaduna depots. When you look at our operating performance, you will notice that Benin generated a loss of 2,000 naira. Kaduna made a loss of 10,000 naira. That is why management is thinking of closing Benin and Kaduna. That's what the examiner wants you to do. Ordinarily, in the first question that we solve, the question of Adigbolija, you are given the profit or loss for each of the three brands of the ice cream. But in this particular question, you are not given income statement for you to be able to see the reason why they want to close Benin and Kaduna depot. And that's why examiner told you to prepare a statement indicating why management is thinking. And I mentioned when I was explaining the concept of deleting of a segment, the only reason that we make management to be contemplating on closing a particular segment is if the segment is operating at a loss. So you can now see that Benin and Kaduna depots are operating at a loss. That is why Ife Sinachi Limited is thinking of closing down Benin and Kaduna depot. So let's have the second requirement. Requirement number B, you are to redraft the statement prepared above using
Sorry.
contribution margin approach. So pay attention, please. You want to
Sorry, can we
use
ask questions now?
Go ahead.
So I'm wondering why fixed selling and distribution cost is a variable cost.
It's not a variable cost, it's relevant cost.
Okay, relevant cost, that's fine. Thank you.
What we are saying is that when you talk about fixed selling, you want to make sales, right? If you don't
Yes.
incur fixed selling expenses, you will not be able to generate the sale. Let's say, for example, you want to hire some sales executive. Part of the compensation to the sales executive will be, you'll be paying them, if they are able to, you'll be paying them salary, right? You're also going to pay them commission on the number of sales they're able to generate. So that means if you don't pay the salary for the sales executive, you'll not be able to generate the sales, isn't it? Now,
Yeah,
the other part of the selling expenses is the variable, which means that this is to motivate the sales executive that the more, if you are able to sell so much quantity, you are going to earn so much commission. So that means the higher the sales that the sales commission, the sales executive is able to generate, the higher the variable, the higher the sales commission that he or she will earn. So any selling expenses, whether fixed or variable, are relevant costs, because if you don't incur the cost, you will not be able to generate the sales. If you cannot generate sales, how do you make profit? All right. So yeah. So number B, examiner is asking you to redraft the statement using contribution margin approach. You have to be very careful. You have to be very careful to the dictate of the question. Because of time, let me just put it there. So I will just say contribution margin approach. Contribution margin. You can call it contribution margin approach or contribution margin statement. Our figures are in thousands. Had it been I'm in physical class now, I will not be doing this second part. Only you will do it. I'll just clean the first one and anyways, let's move on. Lagos, Benin, Kaduna, then total for the organization as a whole. I don't need to write out unit again. We've written it before. Therefore, the sales value, pay attention to this. We want to use income statement approach. So that means examiner is asking you to use contribution margin approach. In this case, you are not going to consider anything like fixed cost to each of the products, to each of the depot. Your focus is on contribution margin. That's what examiner wants you to use. So for each depot, you will stop at contribution margin. So come here. The sales of Lagos is 1,400. 400 for Benin. Then 200 for Kaduna, total 2,000. Then you consider relevant cost. Only relevant cost for each depot. So we have direct material. Direct material for Lagos, we calculated 336. Here is 336, 96, 48. Then we had total of 480. 480. Then we have direct wages. Direct wages for Lagos, please, you can be calling the number for me. 210 60 30. 210 60, 30. And the total is 300. Okay. Then we also have variable. Is it variable next? Let me see. Factory variable overhead. Factory variable overhead. So for Lagos, 294, 8442, 294, 84, 92. Is it 92 or 32? I think it's 32.
42.
42, okay. And total is 420. Then after this, after factory variable overhead, we also have variable selling and distribution. Variable selling and distribution. For Lagos, I think this is 70, 32, 20. 70, 32, 20, then 122. Then we also have fixed selling and distribution, which is 80,000 for Lagos, 50,000 for Benin, and then 30,000 for Kaduna. Total is 160,000. All right. I think those are the relevant costs. Yes. We need to find the total relevant cost. So the contribution margin contribution margin for Lagos, we got 410, 410.78, 410.78, 30, then 518. So these are the contribution margin we calculated. All right. So like I said, examiner is asking you to use contribution margin approach. Remember what I told you when I was explaining the concepts, that under deleting of a segment, the most important thing you need to do is to compare the sales value with the relevant cost of making the segments, whether it will result in a positive or negative contribution using income statement or contribution margin approach. So when you are using contribution margin approach, you are going to stop at contribution for each of the segments for the purpose of this calculation, for the purpose of this question. Therefore, I will come here, I will close for each of them. But for the company as a whole, the company has incurred fixed overhead of 400,000 naira. That fixed overhead, we said, is a general fixed overhead. Therefore, it is the company that will bear it, not the depot, not any of the depot. So fixed overhead factory fixed overhead of 400,000. So take it directly to the company as a whole. Then you find the difference. The difference is 118,000. So because we are using contribution margin approach, each of the depot will not bear the fixed overhead. They will not share in the fixed overhead because you are using contribution margin. That means you have to stop at contribution for each of the depot. So that's what you need to do here. And that's what we have done. This 118 is called net profit. or loss. Examiner is not asking you to make a decision. You have to just prepare contribution margin approach. All right. Next item, number C. We have a few minutes to go. You have to prepare a statement using the historical approach to show the net profit of the organization after closing down the depots, after closing down the two depots. Now, what examiner is saying here is that you can in the first statement that we prepared, we have indicated the reason why the management of Ife Sinachi Limited is thinking of closing Benin and Kaduna depot because they are operating at a loss. Now, examiner is now asking in the C part of the question that you should prepare the net profit after closing down Benin and Kaduna depot. So I can then come here. I can come here to say number C. If you like, you call it historical statement. If you like, you call it income statement. It's the same thing. Income statements. Okay. Now, if you close down Benin and Kaduna depots, it means that only Lagos will continue in operation. There will be no Benin and Kaduna again. So you can say income statement for Lagos, or you can say income statement after closing down of Benin and Kaduna depots. However you want to put it, you are still saying the same thing. So income statements after closing down, of Benin and Kaduna depots. So let's see, what will be the implication? So like we said, now that you have closed down Benin and Kaduna depots, it means that only Lagos will continue in operation. So in Lagos, 70,000 will be produced at total sales of 1,400. Then relevant costs. Relevant costs for Lagos. Give it to me. Give me the number. We have direct material. How much is direct material for Lagos?
336.
336.
336. Yes.
We have direct wages.
210.
210. We have
Factory
factory variable overhead.
Yes.
How much?
294.
294.
294. We also have fixed
Variable.
factory fixed.
Okay.
Abi, which one is next?
Variable selling expenses.
Variable selling expenses. Selling and distribution. How much is it?
70.
70. Then we also have fixed selling and distribution for Lagos.
80.
80. All right. So that's all. Those are the relevant costs relating to Lagos. We had it up. That will give us what?
990.
990 minus 1,400 minus 990.
410.
410. That represents contribution margin for Lagos.
Lagos.
Here is 410. Now, after contribution margin, we need to deduct fixed costs. So I will then say fixed to determine profit. I will say fixed factory fixed overhead. Factory fixed overhead. The company has incurred fixed overhead of 400,000 naira. Now you are no more producing Benin and Kaduna. That means only Lagos will bear the entire 400,000 because the company must recover the fixed overhead incurred. So, and then since they are no more producing, only Lagos will bear the entire 400,000. That means the profit has reduced to 10,000.
10,000.
So net profit
10.
for Ife Sinachi is 10,000 naira. You can see profit has dropped from 118,000 naira to 10,000 naira as a result of dropping the Benin and Kaduna depots. Okay, let's go to the final part of the question. You have to advise the management based on the income statement prepared above. Like I mentioned to you, please, that person should
That person
mute.
should mute.
Chairman, thank you. So, Uh, you can see from the question examiner in the A part, you have to prepare budget statement. In the second one, you have to redraft the statement using contribution margin approach. In the C part, you have to prepare a statement using historical approach. Now, examiner is asking you to advise the management based on the income statement prepared above. Whether you are using historical budgets, is the same thing, is the same income statement. That's the bottom line. So we need to advise. Examiner is asking you to advise. The management is thinking of closing Benin and Kaduna depot. So examiner is now asking you to advise whether they should close Benin and Kaduna. So what will be your response? How will you advise? Talk to me if you know what to say. Yes, what should be your advice? The company wants to close down Benin and Kaduna depots because they are operating at a loss. Benin generated a loss of 2,000 naira, while Kaduna generated a loss of 10,000 naira. The management of Ife Sinachi Limited is now thinking of closing Benin and Kaduna. So if the company closed Benin and Kaduna, what will be the impact? We have identified the impact that the profit will reduce from 118,000 naira to 10,000 naira. So let me just, let's do this. That's advice. So I will then come here because of time. So I will say, Ife Sinachi Limited should not close down Bini and Kaduna depots because they are contributing. You remember our decision rule. If they have, because Benin and Kaduna has positive contribution, our advice is that they should not discontinue Benin and Kaduna depots. Okay, because they are contributing, they are actually contributing positively towards the recovery, of the company's general fixed overhead of 400,000 naira and net profits. If you will not stop here because you are doing analysis, you then say if Bini and Kaduna depots Don't go and be using this kind of a sign on the day of your exam. Call it this, that is not hand. So you have to write it properly. Hand. So that you don't say that's the way Mr. Adejuwon wrote it. Let me write it properly. If Benin and Kaduna depots are closed down, the profits of the company, the profit of Ife Sinanchi Limited will fall to 10,000 naira, or will fall from 10,000 naira, however you want to put it, will fall from 118,000 naira. Let me write it. To 10,000 naira. So you can then say the difference or the difference or the loss of 108,000. The loss of 108,000, that is 118 minus 10,000, represents the contribution, represent the positive contribution of Benin. Benin contributed 78,000. Positive contribution of Benin, and Kaduna contributed 30,000 naira. Okay, so that's that. We've already made our point that the company should not close down Benin and Kaduna depot because they are contributing positively towards the recovery of the company's general fixed overhead of 400,000 naira and then the net profits. And that if Benin and Kaduna depot are closed down, the profit of the company will reduce to 10,000 naira from 118,000 naira. So that means that there will be a loss of 108,000 naira. That loss of 108,000 represents the positive contribution of Benin and Kaduna. When you look at our calculation in the A part of the question, you will see that uh, Kaduna contributed, Benin contributed 78,000. Let me use the second one that is clear. You will see that Benin contributed 78,000, whereas Kaduna contributed 20,000. Addition of the two is 108,000. So our profit now has reduced to 10,000 from 118,000. So that means because of deleting Benin and Kaduna depots, the company will be losing 108,000. That's why we're advising that if it's Sinachi Limited should not discontinue Benin and Kaduna depot. That's it. That's end of the question. Now, if you now want to impress your examiner, you need to go ahead and state all the qualitative factors. So all those things, anything you believe, any factor you think that can impact the closure of Benin and Kaduna, so you go ahead and state it. Let me read your message. Some people are sending messages. Okay. Please, how was the factory fees overhead generated? I can't find direct wages given. Variables are not fixed. What? Chioma, the fixed overhead is there in the question is 400,000 naira. We then share it. We share it based on the number of units produced and sold. This is how we share the variable overhead of 400,000. This is the working here. Working number 2.
Yes, I
Chioma,
know.
are you?
What I'm asking
Yeah.
about is the percentage that was given for variable fixed factory overhead.
The percentage. Maybe I told you now, we are using the sales units. You are told that the company will manufacture 100,000 units. The company will manufacture and sell 100,000 units. So you look for the question, you look for something that unites all the segments together. So in this case, Benin, Lagos, Benin, and Kaduna, what is common to them? What is common is 100,000 units. And that 100,000 units, you distributed it to Lagos, 70,000. Benin 20,000, Kaduna 10,000. So that is the basis upon which you are going to share the fixed overhead of 400,000.
Yes, sir. So my question is factory variable overhead that was 140% of direct wages.
Is there in the question?
I didn't say it though.
Examiner told you that your factory, let me see. You are told in the question, in the first table, you are told factory variable overhead 140% of direct wages. That's what the examiner told you to do. All right?
That where
Okay.
I can't find the direct wages. That's my question.
I said go to the question, you see it there. Go to the question. It's on the first page. You see it there. The first table. Have you seen it?
Statement that for 140% of direct wages, but I don't know where the direct wages was stated because there was no figure given as direct wages.
You do not know where direct wages is stated.
Yes.
Maybe you were there when we calculated the direct wages by
I
ourselves.
was not online. My this thing logged me out.
So that's what you should say now. That how do you arrive at direct wages? You are talking
That
about
was
one
my
for
question. That how
see the
did we
direct
generate?
wages. See the direct wages here now. We have calculated direct wages is 3 naira.
Okay, sir. Thank you, sir.
All right. So for you to now impress the examiner, you have to state your qualitative factors. So you can talk about the impact of the closure decision on the company's turnover. You can talk about the how anything that all those factors that you think will impact the closure of Benin and Kaduna. That's what examiner is actually asking you, even though you are not asked in this question, but for you to be able to earn your full mark, you need to state your qualitative factors. You need to state your qualitative factors. All right, because we're already over by 10 minutes and some of you have disappeared. That notwithstanding. So this is where we are going to stop today. By the grace of God, in our next class, we are going to be talking about make or buy decision. Therefore, I will advise you to go ahead and read make or buy decision so that once I come in by the grace of God, I will explain the concept. Then we have illustrations as well. Okay. And then for VI students, I still have one more question to solve for you under relevant costing, which is May 2025 diet. Question number 1. I'm not sure if I've solved it. Samuel, let me see some of you that are online. If I have, okay, Chairman is there. Chairman, can you confirm if we have solved the question number 1, May 2025 last week? Did you solve it in the class?
Question number 1, May 2025.
I promised you last week that I have one more question for you, but I'm not sure if I've solved it in the class.
The one we
Okay,
did
no
on
worries.
on 6. We've not done it.
Oh, that's Clepatoni, right?
Yes.
So no worries. In our next class, by the grace of God, that will be the first thing we are going to do before we move to make or buy. Okay? All right then. So any question for me so that we can close the class? Any question? I can see. Let me read some of you that are still on. I can see Choma, Beauty, Real One, Anthony, Chidera, Efe Tobore, I can see Adijare, Enoch, Favor, Ahmed, Idrisu, Ijoma, Joshua, Joy, Lanry, Martha, Mary, Michael, Nancy. Hey, Nancy, you joined today. Nancy, you've been avoiding my class. What did I do to you? Nancy, talk to me. Where have you been? 2 classes now, I've not seen your face.
I'm here,
There's
sir.
God, though. Where have you been all this while? Eh? All right. I can see Olushola, Oluwatosin, Oreoluwa, and the rest. Thank you guys for waiting behind. I will see you next week by the grace of God. Good night, everyone.
Good
Good
night,
night.
Good
sir.
night.
Thank you, sir.
Thank
Thank
you.
you,
All
sir. Good
right.
night, sir.
Thank you very much, sir.
Good
Good
night,
All right.
sir.
Good night. Good night.
Thank you.
Good night, Mary.